If you have already set up a Dubai foundation or a family office in Dubai, the next big question is that where you should hold your money and investments. This video is a guide on how Swiss private banking fits into that picture and why more Dubai based clients are using it for long term asset protection, diversification, and peace of mind. We'll look at how the Swiss private banking setup works for Dubai foundations, what kind of assets you can hold, and why Switzerland remains unique, and what you need to know before opening an account. Before we start, my name is Shiraz Baid and I'm the founder at Lepidus Wealth, where we help clients and families protect their assets using a range of tools including trust, foundations, wills, and offshore structures. So if you own a business or real estate, don't wait until a legal or health crisis to start thinking about protecting what you have built. Instead, request your free and customized asset protection plan by clicking the link below. You can then implement it step by step as your journey progresses. You might already be holding assets locally or under your operating company, but those assets, while convenient, are still exposed to several forms of concentration risk, whether geopolitical, regulatory, or simply systematic. If there is a liquidity crunch or a compliance disruption in the region, that exposure can become critical. And for many families, there is a psychological threshold beyond which keeping everything in one jurisdiction just doesn't feel safe. Swiss private banking at its core is about smart, compliant diversification. It's not about secrecy. Those days are long gone. What it offers today is professional custody in a neutral, well governed environment. That means access to a multi currency platform, experienced portfolio managers, legacy focused investment tools, and most importantly, optionality. Your capital is insulated from regional disruption and governed under completely different legal regime. Here is what it looks like in a real structure. Let's say you have set up a DIFC foundation. The foundation isn't designed to trade or do business, but it can hold a wide variety of assets, both financial and non financial. Many of our clients choose to open Swiss private bank accounts in the name of the foundation. This keeps personal exposure minimal and ensures the assets are held with institutional grade oversight in a world class jurisdiction. To do this effectively, your structure must be clean. That means up to date documentation, a clear source of funds, and a professional presentation. Swiss banks are cautious by nature, and for good reason, because the regulatory environment demands from it. Some institutions are more open to Dubai based clients than others. A strong relationship manager and a trusted intermediary introducer can make a significant difference during the onboarding process. It's worth noting that the banking relationship is not purely transactional. In the Swiss model, it's often a long term advisory relationship. The relationship manager becomes a key part of your advisory circle, coordinating with your lawyers, your foundation counsel, and potentially even your next generation. And this isn't just about parking cash. Swiss banks offer much more than traditional accounts. Depending on the institution, you can access discretionary portfolios, private equity funds, venture capital opportunities, hedge fund strategies, and even custodial services for physical gold, real assets, or even cryptocurrency custodial services as well. Some even offer access to bespoke lending, aircraft or yacht financing, or complex escrow services for family office transactions. If you're planning for the next 20 or 30 years, or for the next generation, that breadth of services becomes critical. Cost is an important part of the equation. Swiss banking isn't inexpensive. Minimum often starts at $1 million in deposits, an annual fee that can range from 0.5% to 1.5%, depending on your service level and portfolio mix. You might also see charges for foreign exchange conversion, custody, and performance based fee depending on the mandate. But with those costs come a layer of service, governance, and reputational backing that are difficult to replicate elsewhere. From a planning perspective, there are additional benefits. For instance, when a foundation holds the Swiss account and it is structured correctly, it may simplify cross border inheritance. In many cases, it helps reduce exposure to forced heirship laws in client's country of origin. It may also streamline global tax reporting when properly managed, but this must always be tailored to your jurisdiction and risk profile. Proper legal and tax advice is essential. You'll also want to consider your obligations regarding CRS, that is Common Reporting Standard, and how your structure is reported globally, which is another reason to work with experienced advisors. So, what about the alternatives? We often get asked why not simply use a UK, Singapore, or even European bank. These can be good options depending on your objectives. But Switzerland remains unique in its neutrality, its longevity as a financial center, and its focus on client service over volume. In many cases, Swiss banks are privately owned, conservatively run, and aligned with long term preservation goals. Unlike in some other centers, wealth management is the core business in Switzerland, not just a division of larger retail banks. You also need to consider that the Swiss financial ecosystem goes beyond banks. It includes private wealth law firm, tax consultants, legacy planning specialists, and family office service providers, all working within a well regulated but client centric environment. That holistic ecosystem makes Switzerland especially attractive for families who want to future proof their wealth. And that leads to an important mindset shift. If you have established a Dubai foundation to protect generational wealth, it makes sense to combine it with a banking partner that is also thinking in terms of generation. Swiss private banks, the right ones, are built for that kind of relationship. As I mentioned earlier, if you own a business or real estate, don't wait for legal or health crisis to start thinking about protecting your wealth. Many people think asset protection is only for ultra wealthy. But the reality is that some of these solutions cost as much as setting up a free zone company in Dubai. If you want to secure what you have built and ensure your legacy, you can request your free and customized asset protection plan by clicking the link in the description below. And if you're serious about building long term financial security, you should really check out my next video right here.